Now, in the last couple hours, we've just seen the biggest stock market rebound in like 5 or 6 years. And we're going to go over exactly what just happened because you want to know how I heard about this story? I looked at my portfolio and I was like, how did it make so much money today? And then I went and looked at the news and we're going to go through exactly what happened. Also, in the second part of this video, we're going to go through a massive threat that China poses to the overall economy, to each one of you personally, okay? Because we're talking about the housing market and the global economy. And this is something they could do at any time. China could do this any time that they want. And so as we push into this trade war with China, it's important that citizens understand this trigger that China has that they could pull at any time to crush us. Now, before we get into it, I want to tell you about a really quick sponsor of this video, and then we're going to get into the story. Big trouble is coming. If the government raises interest rates, the economy could crash. If they lower them, the dollar could collapse. With tariffs in the mix, either way, we're headed for a debt and dollar reset. And it's already starting. Someone just took real physical delivery of 30 million ounces of gold. That's more than 1 out of every 10 ounces that the U.S. government says that it owns. Big banks around the world are buying gold like crazy, and they aren't guessing. They know exactly what's coming, and they're getting ready. Experts believe that gold could jump to $6,000 an ounce. That's the level needed to fix the damage when the dollar drops. And that's exactly why American Alternative Assets has created a free wealth protection guide that you need to get your hands on immediately. Inside, you'll discover the blunt truth about how bad this market crash could get, why central banks are frantically stockpiling gold at record levels, and a simple 3-step strategy to shield your wealth while others get wiped out. History always repeats itself. 2000, 2008, 2019. Some saw it coming and protected themselves. Others lost everything. Do you have time to rebuild? The choice is yours. So call 833-656-GOLD or visit jessegetsgold.com to claim your free wealth protection guide. That's 833-656-GOLD or jessegetsgold.com. Protect what you've built before it's gone. Now, before we get into the market rebound, I wanted to go through the leverage that China has on us that could absolutely crush our economy anytime that they wanted to pull that trigger. Okay. Now, obviously, there are huge triggers we could pull to crush their economy also, but it's important that we understand that the idea that we have just blanket leverage over China that they do not have in return against us is completely untrue. And this is one of those financial instruments that I understand very well. And so I want to explain it to you guys so everyone understands what we're looking at. Okay, so here's how China could crush the U.S. housing market. At the end of January, foreign countries owned $1.32 trillion worth of U.S.-backed securities, or 15% of the total outstanding, according to Ginnie Mae. If China wanted to hit us hard, they could unload treasuries. Is that a threat? Sure it is. Selling of MBS by foreign entities could further spook the mortgage market. That's mortgage-backed securities, okay? Now, I'm sure all of you guys remember what mortgage-backed securities are. If you don't, I'll explain it in a second. So mortgage rates are rising sharply this week as investors sell U.S. Treasury bonds at a swift pace. Mortgage rates follow loosely the yield on a 10-year Treasury. Some speculate foreign countries could be dumping U.S. Treasuries in retaliation against Donald Trump's sweeping tariff plan. Of course, that is happening. But there is another, even bigger concern for both mortgage investors and the all-important spring housing market. Now, we're shopping for a home right now, so definitely a concern for us. What if China, one of the largest holders of agency mortgage-backed securities, or MBS, decides to sell those holdings as well in response to the U.S. trade policies? And what if other countries follow? Okay, so what are mortgage-backed securities? This is really straightforward, okay? So when you take a mortgage out from a bank, right, you put a down payment on a house. Let's say it's $1 million house, and you put down $300,000. So you take 70% of the the house's value, and you borrow that. So you're going to borrow $700,000 against $1 million house. The amount of equity that is in the house dictates the risk associated for the bank, which dictates what your interest rate is going to be. Now, we all know interest rates are going to go up and down on a whole, bunch of mechanisms that they kind of just laid out right there. But either way, let's say that the baseline rate would be 5%. Okay. So if you're borrowing 90% against $1 million home, you're borrowing $900,000. Well, if the housing market goes down a little bit and the borrower ends up upside down, that is a bad position for the bank to be in, because the borrower is much less likely to continue to pay the mortgage because they can't sell the property for more than they owe. Okay. So like if a property owner has $600,000 in equity in a home, okay, they're going to do anything to keep paying that mortgage because they don't want to lose the $600,000 that they have in there. Okay, well, if they have negative $200,000 in the property, well, guess what? as soon as they get into any kind of financial trouble, or they just decide, you know what, I'm just going to let the bank have this property. Well, what's the bank going to do? Once they get the property, they can't sell it for a profit. They're going to lose money just to recuperate what they bought. They lent. If they lent you $900,000, they could sell the property for $700,000. They've only been having you pay for a handful of years. Guess what? They've lost money on that loan. If they, take the house and it's worth 1.6, totally different story. So the mortgage rate is determined by the loan to value. Okay. So when you get a mortgage, okay, and you are paying that back, that has a certain value to the bank. Now, what the bank does, they sell it on the secondary market, and these investment banks take like thousands of mortgages and they package them together and then they sell them as securities. That's what a mortgage-backed security is. So instead of this single mortgage being the investment, it's thousands of mortgages that have been packaged together and then get sold as investments to foreign countries, as an example, like the one given here. Or, in the market crash of 2008, you found out there's all these retirement accounts that buy into these things. There's, there's like, what do you call them? Oh my God, what's it called? Pension funds. Sorry. There's like these gigantic pension funds, and they were being told by investment banks, oh yeah, these are rock solid investments, man. When it turns out that those mortgages inside of those CDOs, collateralized debt obligations, which is kind of the same thing, they were actually filled with mortgages that were given to people who didn't even have any income, who just had a social security number. They lied about their income. The loan to value was determined by a dirty appraiser who said the property's worth $1 million when it's actually worth $600,000. The whole thing was just nothing but fraud. That's why the entire thing came down. Now everybody gets 30-year fixed mortgages. There's not adjustable rate mortgages. There's not these negative amortization loans anymore. It's a much more solid business. However, if you have a foreign adversary that owns trillions of dollars in mortgage-backed securities, well, guess what, dude? If they start dumping them, okay, that has a massive impact on the housing market because it's going to drastically increase rates. Okay. So there's now with that backdrop, let's get into this. So there's another even bigger concern for both mortgage investors, all important spring housing market. China, one of the largest holders of agency mortgage-backed securities, or MBS, decides to sell those holdings as well in response to the tariffs. Okay. What if other countries follow? So here you go. So at the end of January, they're going to look at pushing levers. They're going to look at pushing levers and trying to put pressure. Targeting housing and mortgage rates is a powerful driver for something like that. At the end of January, foreign countries owned $1.32 trillion worth of mortgage-backed securities, or 15% of the total outstanding, according to Ginnie Mae, the top owners: Japan, China, Taiwan, and Canada. China had already begun selling off some U.S. mortgage-backed securities last year, with the country's holdings at the end of September down 8.7% year over year and down 20% by the start of December. Japan, which had shown gains in its MBS in September, showed a drop at the end of December. If China and Japan were to accelerate those sales further, and if other nations were to follow, mortgage rates would rise even more than they are now. The concern, I think, is on folks' radar and being raised as a political source of friction. Okay. So it's basically pretty straightforward. If they start selling these things off, then interest rates go up, which makes home affordability go down. Okay. Now I will lay this out also. So in the same situation, let's say you want to buy $1 million house and you need to borrow $700,000. Okay. So let's just do this. Let's just do this as an interest only payment. Okay. Cause I don't have a mortgage calculator, but let's just do this together. Okay. So $700,000 on an interest only payment. So let's say that your interest only payment was going to be, sorry guys. So let's say you were going to get an interest only payment on, a 6% interest rate. Okay. Your interest only payment would be $3,500. All right. Well, so if it goes up to 8%, what is it then? Times 0.08 divided by 12. Then it's $4,600. Okay. You're talking about a $1,666 monthly payment difference from a 2% interest rate raise on only a $700,000 mortgage. Now, $700,000 mortgage is a lot, but almost $1,700 a month is a lot also on the same exact amount of money that you're borrowing. Okay. So what we're talking about is yeah, when you get down to the nitty gritty, what that means is the person who's selling their house for $1 million can't sell the house for $1 million. They're going to have to sell it for $800,000 because people can't afford to make the payments. Okay. So that is how China can attack the American economy through their current mortgage-backed security holdings. It's a really big deal. And now we're going to move over to how the market exploded today. So we got some good news also. So I've stayed off of the tariff conversation, but it feels like this is a big story because as of 1 p.m., okay, let's just take Meta as an example. This is a company that I own a large percentage of my portfolio is in this particular company. And this was at $505 like 90 minutes ago. And now it's at 571 and climbing. Okay. It's jumped 12% today. Now, what happened? Let's see if we refresh it. Oh, this is actually auto updating. Okay. It's up 12% in a day. And that is directly because of what just happened in the market. So we're going to talk about that right now. Okay. So the Dow surges 2,600 points for biggest rally in 5 years after Trump pauses some tariffs. All right. So just as a quick backdrop, before we get into exactly what just happened right here, obviously the tariffs have caused a tremendous shakeup in the market. And when we're talking about how tariffs have impacted businesses around here, like it's important to be honest about this stuff. Like this is important. Like a lot of small business owners have been impacted by these. And if people are looking for, real world impact, like one of my sponsors hit me up yesterday and let me know that due to import tariffs on China, their business is essentially like untenable. Like they can't do business. Like, and they're huge Trump supporters. Like these are not like Democrats that are trying to make, some big complaint about something Trump is doing. That's not what's going on. This is just a real world impact of what Trump's doing. Now, I believe, and I think it's essentially obvious here that Trump is negotiating, right? Obviously he's negotiating, but what he just did today has just caused a massive bounce in the stock market. So we're going to talk about exactly what that is. And we're going to jump right into it. Go ahead and subscribe to the channel if you haven't yet. I will, you are extraordinarily unlikely to see my content if you're not subscribed. That is just the reality of my life on YouTube right now. So any help that you guys can provide would be amazing. If you comment, it helps. If you like the video, it helps. It's very helpful. Anyway, so depending on who you look at, they're framing this different. I just got an alert. The New York Times says Trump backs down on his tariff thing. It's like, or he got exactly what he wanted, and now he's starting the negotiation process. Okay, so stock surge Wednesday, and this is only in the last hour. Like it's 1:15 Central. This is literally in the last 60 minutes when this happened. Stock surged Wednesday after President Donald Trump announced a pause on some of the reciprocal tariffs, causing a market that's been under extreme pressure for the last week to explode higher. The S&P 500 skyrocketed 7.8 on pace to its biggest one-day gain in 5 years. The Dow Jones Industrial Average rose 2,544 points to, or 7%, also to its biggest gain since 2020. The NASDAQ jumped around 10%. This is quoting Trump. I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately, Trump posted on his Truth Social. Trump in the same post said he is raising the tariff on China higher again to 125%. Now, the fact that we are lowering tariffs on everyone else, but raising them on, like China is the one that matters. China is the one that matters more than any other. Okay. China makes all of our stuff. We all understand that. Like this is not news to anyone. China makes all of our stuff. We get our stuff made over there and then we get it shipped here. Okay. So you're getting it manufactured in China because it's way cheaper. That is how that works. And then if you're running your business on we don't even need to get into hypothetical percentages for hypothetical businesses, but if you have a margin that is critical to your business infrastructure, okay, like this is a world that I have a lot of experience in. Like I've had to look at a lot of spreadsheets. I've had to look at a lot of, spreadsheets. Good God. Just a lot of financial data related to my own businesses and understanding how much we need to make on transactions in order to continue to do business, because you have a lot of costs. You have people that you pay. You have buildings that you're paying for. Okay. You have digital infrastructure. You have all kinds of stuff. Now, my businesses were mostly in tech, but nonetheless, this is not complicated. If you're a t-shirt company and you're paying $6 per shirt, you sell them for 20, and you have all of these things, and like, you know, you personally as the business are profiting $3 per shirt, $4 per shirt, whatever it is. This 125% tax kills your business, literally kills it. It makes it it just doesn't work anymore, right? And you guys know how many things have you heard are made in China? Okay. Now, of course, he's negotiating, right? I'm not saying he's going to keep 125% tariff on China, but that's the one that really, really matters. Treasury Secretary Scott Bessent later clarified that all countries except China would go back to the 10% baseline tariff rate as negotiations take place. The pause would not apply to sector tariffs, Bessent said. I don't really understand. Like, I'm not sure exactly what the sector tariffs are. You know, like I know that there are some, agriculture tariffs or like steel tariffs, whatever. That's kind of, I don't know. That just seems, I don't know. This is a little bit light on details. Stocks that were heavily pressured by the trade war tensions led the comeback Wednesday afternoon. Apple and Nvidia soared more than 11 and 13% respectively. Walmart shares rallied 9.7%. Given how depressed stock prices and sentiment had become, the 90-day pause is sparking violent rebound, and delaying the implementation certainly removes a giant overhang from the market, said Adam Christofouli. But tariffs are not going away. China's tariff rate is now in triple-digit territory, and who knows what happens in 90 days when this pause concludes. Well, I mean, dude, in 90 days, you got to assume we're going to be able to get a lot done at the negotiating table, right? I mean, 90 days is a long time. That's a really long time. Trump has only been in office since the end of January, right? The end of February, the end of March. I mean, like, we're talking long, almost, Trump will have been in office for 90 days in like 2 weeks. Okay, that gives us a lot of time to, to get these deals done. This allows for at least a near-term rally, but I would not assume that the bottom has been put in place. Fool me once, shame on you. Fool me 5 times, shame on me. Prior to the announcement of the 90-day pause, investors were on edge over an escalating tit-for-tat between China and Trump. The EU had also approved a first set of tariffs on the U.S. set to start April 15th. But nonetheless, stocks were trending higher into the afternoon. Traders were encouraged after Bessent stated he would be taking a lead negotiating role in tariff talks. President Trump also urged investors now is a great time to buy shortly after the market open. Oh, wow. He told everybody what was going to happen. He literally told everybody what was going to happen. Everybody should have listened. Next time he says buy, I'm going to do it. That is unfortunate that I didn't see that and didn't listen, because could have made a lot of dough. All right, so continuing, anxiety around the rollout of the tariffs fueled a 4-day rout for stocks. Over the course of the previous 4 trading sessions, the Dow had lost more than 4,500 points, while the S&P 500 sustained a 12% loss. The NASDAQ was down more than 13% in that period. These were losses not seen since the pandemic. And I started telling everybody, good time to buy. Anybody who knows me can attest to that. I said this. I love when this happens. Good time to buy. Hey, Jesse, did you actually buy any? No, I did not. Why not? I am an idiot. I'm an idiot. This always happens, dude. This doesn't always happen. I've hit well many times, but now I am kicking myself because I really should have moved on that. So the airline stocks climb in a broader market rise. Airline stocks soared in afternoon trading Wednesday. First quarter earnings, and Delta, which reported first quarter earnings earlier in the day, rose more than 22%, on pace for its best day since March of 2020. United Airlines is up 19%, on pace for its best day since 2020. Southwest up 12, Alaska up 12. Okay, Bessent said there's now a 10% temporary floor for tariffs. Sector levies not included in the pause. The 90-day pause on tariffs announced by President Trump has some other expectations beyond China, which is seeing levies hiked to 125%. The 10% universal tariff will still apply to most countries. Treasury Secretary Scott Bessent also clarified to reporters that sector-specific tariffs are not included. Okay, so what exactly does that mean? like what are the sector tariffs? So mega cap tech stocks rallied Wednesday afternoon, celebrated 90. So like you talked about, Meta's up 11, 12%, whatever that is. Let's take a look now. Yeah, it's up 12%. And here's the reality, dude. I don't look at these stocks every single day anymore just because I'm not, 12.2%. Look at that, dude. Look at that. I don't look at them every single day because I'm not going to sell them anyway. And that's kind of my entire kind of thought process on this topic is when they're like, oh my God, school teachers are getting routed. They're just getting absolutely routed. And I'm like, well, they're talking about their 401ks. I'm like, well, guys, if you look at the stock market for the last 100 years, yeah, it goes like this, but it goes like this. You know what I mean? It's like every time it goes down, it ends up going back up. I remember during the pandemic, there was one day that was a catastrophic loss. And our money guy was like, any cash that you have, this is a once in a lifetime opportunity. Get it in. We had some cash, we got some in, but not, we could have done much better now. But, the people who know what's going on, it's going to come back. Okay. The only way that you think that it's not is if you think Trump is actually completely insane. And this demonstrates he's not. Okay. That's the biggest takeaway from this right here, is demonstrating that Trump is not insane. He knows what he's doing. Okay. He knew the market's going to get depressed. And guess what? Okay. Guess what? Now that you know, next time he does this, you can take advantage, right? I can't even imagine how much money insiders are making, because Trump is probably, I can't think of a person who has had more impact over markets ever than Trump does on his own right now with the tariffs. Think about that. Think about how much impact Trump can have on markets by himself because he has total control of tariff implementation, right? That impacts every single part of global good distribution for buying and selling all around the world. And one guy can go, we are implementing an across the board tariff of blah, blah, blah. And boom, it impacts every single business on earth in one way or another. So if you had, advanced knowledge of what a single person is going to do or say, you could make a fortune, Nancy Pelosi seemed to have done pretty well for herself in that regard. And if you think that, that's insider trading. It's like, do you have any idea how easy it is for actual wealthy people to trade money that is maybe not theirs? You know what I mean? Like, or it's not theirs on paper. Come on. Okay. People are crushing it right now. Market volatility is great for wealthy people, it's great for insiders. It's always great for insiders. If you have foreknowledge of what's going to happen, you can just absolutely kill